after a weak Friday, closing on the lows and going lower after hours, one of two things can happen on Monday. The bottom falls out of the market and we're down 100 handles. Or things kind of calm down a little bit and they come in and they buy the dip. Are things getting back to normal? We don't know. We don't know nothing. We just look at the markets, look at the price action, and bring you the best information we can. We're going to cover what's moving, what's not moving. Tim Quast, 8:35, getting us set up for Quad Witch. It's a Monday, folks. It's pre-market prep, and we got a big week for you.
The volatility right now is really incredible.
Wow, look at that consolidation on the upper right chart.
You know what we've seen this earnings season? Some of these expected moves get even more violent. This is why I have switched my strategy 10 years ago. And if you're chasing, you're in trouble.
Okay, we're going to change things up a little bit, folks, as we're going to tell you that this show was brought to you by TradeStation Securities. Trade smarter, move faster, and stay in control with the platform built for serious traders and people that want to be serious traders. And who cares about the futures? Who cares about the dollar? Who cares about gold? We're green, man. This is a green machine here. This is Triple D's special watch list that we look at and we focus on. And some mornings we come on and it's all red. We look for it, and sometimes there's some green and then there's some red. And then there's a day like this where it's almost all green here on the Monday morning. Sometimes things change, though, at 9:31. It certainly changed by the end of the day. But let's get it started with none other than Triple D.
Coming in. What's going on?
You got a
We're
haircut?
not color-coded today. Are you wearing a T-shirt? I always wear a T-shirt, and now I'm wearing the collar. Look at I'm the fancy one. I even got the haircut for you. Look at this. Hair's cut, all fancied up here, just for you guys. Just trying to pretty myself up after I had the plague for 2 months.
You know what? I kind of got up early, super early to go to the gym, and I didn't want to turn the light on, and so I was just kind of like reaching in the closet. And I'm like, okay, I'm just gonna wear this shirt. So I don't want to wake Lisa up.
You just throws one in the dark.
I just said, oh yeah. This
feels
is
nice.
It's gonna be 55 degrees here today, so this is nice thin shirt. But Triple D, the end of the world did not come this weekend.
Yes, no escalation. That is the story of this morning and over the weekend. And I know futures opened down, and I don't know what they were doing. Joel, opening down. We can bring those futures charts up now. I don't know what they were doing opening down at 6 o'clock on Sunday night, because I was like, well, why are they down? I'm like, we really didn't have any escalation at all. And then they started buying the dip, and they have not stopped buying the dip. And now we're trading up substantially here, over 50 handles here, and over 70 handles off the overnight low. So no escalation equals buy. So we're at a point where no news is good news over there too. Now, obviously escalation, things can happen. We know the war trade is still the driver of the bus here. But what also is the driver of the bus here this week is going to be the Nvidia tech trade. I want to bring Brentster in here though first. Just to recap a little bit of the Middle East, I think it's important to give context here.
Good morning.
Just on the Middle East. Brentster, how was your weekend?
My weekend was pretty good. Pretty darn good. Chill.
Nice. We like chill weekends.
Yeah. I'm ready and raring for this week on Wall Street.
So let's just talk the war trade for a few seconds here. We're not going to go deep into it because there's not a lot to add, but again, oil, we know the oil stock market is very inversely correlated. Oil's not up a pile. Every weekend we've come in and oil's been up huge. I think traders breathe a sigh of relief that oil is not actually trading up substantially here this morning, and USO is actually trading in the red. So no escalation is good news for the market. Anything else? Any other updates over there?
The only thing that I think people were throwing around headline-wise was that Trump had been asking allies, U.S. allies, for help keeping the Strait of Hormuz clear. I think that was about it.
We don't have a lot of updates on that, obviously. Also, Trump has canceled or at least delayed his trip to see Xi. At least that's the rumors that he's delayed it. Basant came on CNBC just about 20 minutes ago and said the war is not the reason for the delay. It is simply logistics. So if there is a delay, it is not because of the war. It's not because Trump is scared to travel here right now. It is logistics. I mean, what's he going to say? Of course he's going to say that. So we don't know what the reasons, if that's the reason it's the war, or if it's not the war. But I mean, Basant, one thing about Basant, I said this to you guys in the pre-market show. When Basant is coming on CNBC or Bloomberg or one of the major headlines there, it's almost always a buy, like right as he starts talking, because Basant rarely says anything, I don't know if he ever does, to bring the markets down. One, he's very well spoken. Trump is not that well spoken, so you never kind of know what Trump's going to say. Basant is very well spoken. He's very coached. He knows what to say. It's always going to be something positive to try to bring the markets back up. So we saw Basant come up, and the S&P futures rallied about 8 points during his CNBC interview, and it's kind of a no-brainer. Basant's coming on because he's very well spoken. He knows what he's going to say. He's not going to go off the cusp and say something stupid. It's kind of a safe play to say the future's probably going to rally when Basant talks, and he did everything again to calm the markets. First thing right away saying this delay is not because of the war with the Trump-Xi meeting. It is because of logistics if it does get delayed at all. Talking about getting the Strait open, talking everything the market wanted to hear. He's very good at that. So markets have rallied a little bit on that as well. So the question now, where do we go from here? Well, tech stocks back to the well, because that is what has been working throughout this environment, really. I mean, if you look at a stock like Nvidia itself, we haven't really sold off much in the war. We sold off after the earnings, and it's just steady as she goes, hanging out, steady as she goes. Well, we get a huge conference starting today. The Nvidia GTC starts today. There's going to be a lot of companies presenting there. Jensen Huang is going to be speaking. I don't know if we have the time. It's tonight, I believe, Jensen Huang is actually speaking. Brentster, I don't know if you have details on that, or if Michael.
It's 2 p.m.
Is that 2 p.m. Pacific time or 2 p.m. our time?
Let me double check. I believe it is.
We're gonna get because the time zone.
I believe
it sounds like it's 2 p.m. Eastern.
It's 2 p.m. Eastern. Yeah.
Okay, so remember, he's
2 to 4 p.m. Eastern.
So is this a catalyst for Nvidia? I think so. I'm long Nvidia. I'm always long Nvidia, but I was long Nvidia extra over the weekend. We talked about this in the STN room and saying that Nvidia, even in the context that the market sells off heavily on some type of escalation over the weekend, I felt like Nvidia would hold up because of this conference. Obviously, that has happened. Nvidia is trading up 1.5%, so trading up almost twice as much as the market. So I'm going to be rewarded for that long here this morning, which I will get rid of that piece of the weekend trade, the weekend Nvidia long here. Now, the one thing is, it's going to be about the companies that are getting mentioned, one directly by Jensen Huang, or the companies that are presenting. Do we have a few of those names here that are presenting today there, Brentster?
Yeah,
or
today.
Presenting in the next couple of days?
A few highlights. We can take a look at the calendar that McPhee has made for the community.
Yeah, let's do that.
Just a couple highlights for today. Tesla is going to be presenting on, I believe, Optimus, IBM, CoreWeave, CrowdStrike, Cisco, Seagate, STX, and also Shopify. You want me to do them again? Tesla, IBM, CoreWeave, CrowdStrike, Cisco, Shopify, STX. Those are just today. We can put a little banner on screen so you can have them, or maybe I'll put them in the chat.
But bring the calendar up, because Michael's done a great job in the background creating these calendars. So we're going to grab that right now. And in our calendar, we have the earnings plays, but we're also been doing the conferences. That's why our calendars are the best. We're trying to give you all the catalysts. I mean, at Stock Trader Network and Pre-Market Prep, we are catalyst-driven traders. What does that mean? We're looking for drivers of price. What are people going to be talking about? What are they getting excited about? Because that's what moves price. You could go and put on your CFA hat and do fundamentals, and that works great sometimes for the long term. But when you're a short-term trader, you want to know what's moving today and what's everybody going to be talking about. They're going to be talking about this NVIDIA conference here today. So, it's a nice put together here by Michael in the background here. Obviously, earnings on top. We put the economic data, and then we're doing company events at the bottom. So, come and follow us here. Obviously, you can get these calendars sent directly to you as well. But NVIDIA CEO Jensen Huang speaking, and then we have a number of companies. You can see them all presenting here on the bottom, in the bottom window there. So lots of companies presenting here this week. Obviously, we've given you some other highlights here as well from today. We can't fit everything on this calendar because there's so many presenting there. But, you know, it's interesting because Tesla did not present at NVIDIA's last conference, so they are presenting here. I mean, maybe start with first, Joel. I want to bring into the technicals here a little bit here on these trades. And then we're going to get to the meta news. We got the Nebius news. Don't worry, we'll get to some of that here as well. But just quickly do a technical on NVIDIA here because, you know, we've been talking war. Well, in the background here, we got hardware stocks. We got NVIDIA itself been holding up pretty well. What are your thoughts here on NVIDIA as it trades about 17 times forward 2027 earnings? So we're starting to get like, you know, not, you know, crazy valuation anymore either.
I'll give you some general technical comments, or I'll give you technical comments on NVIDIA, and then I'm going to make a broader comment here for more of trading strategies and way to approach this. I mean, this is consolidation station, folks. I mean, I don't know what else you could say except this stock has been in a major consolidation period. Everyone was waiting for it to come back down to 170. No can do. Everyone thought this was, oh boy, we're out of the woods. We're clearing 194, baby. That was on the earnings, and they slammed it right back down. So this is, you know, the 50-day at 185.5 has been a pretty good number if you're nimble. If we could get above 185.5 here and be stable and get a bit above there instead of just bumping our head against it, then you got to be optimistic. Maybe go back up to that 190 area. The spikes have been consumed at the 200-day moving average. That's where people are putting their bids, and it's above the 170. So on the downside here, people we're not getting 170 anymore, man. I got to buy 175. I got to buy 176. So the major support's moving up. What I just going in general here about these conferences, there's catalysts, right? And the catalysts lead up. Now, this, and I just using Serve Robotics here because we're talking about the companies. Serve Robotics. This is when that little robot went up on the stage at the CES conference, right?
At the tech conference, NVIDIA back in January.
And so there's run-ups into these events, and then there's the catalyst into it. But, you know, after the catalyst is gone, after the event's gone, you better get some follow through, or else you could have something like happened here to Serve Robotics. Actually, I just know it had a pop the other day and it gave it all back. So it's an important, like, you know, for NVIDIA kind of topped out too around CES, is to identify the stocks, identify the price pattern. But once that catalyst is gone, you know, be careful, you know, exit or reevaluate their position, because we're identifying something for you. We can see the price action, but what happens after that price action, you know, is what's important. But I just like using Serve on this because that really stuck out to me.
Let's look quickly at Tesla technicals, and then I want to get into the meta news here. So Tesla has been a consolidation station here for a long time as well, consolidating down at the 380, which was that November low. So interesting spot here. We talked about the setup in the room here about saying, hey, if you wanted to take a shot on Tesla, now is the time because you've got great support here at 380. If it breaches 380, then it's probably, you know, a sell, at least from a trading perspective here. But it held support here once again. Now you have a catalyst presenting at GTC. You know, as this stock, you know, get a little bit of lift here today, it's barely up. Like considering its higher beta, it's up just slightly more than the pre-market in the pre-market than the S&Ps. Thoughts here on Tesla, Joel, as we sit in consolidation stage?
Gosh, it's just I know that move on Wednesday. Just I can't remember what the catalyst was, but it had that big day, gave it all back. I'm just going to go with the moving average again on this. And right now, the 200-day comes in at 391.20 right here, a little bit higher, 393. You're finding support here under 400. You don't want to see it breach 380. But, you know, for this week, you know, what are we at 395.58? You like to see the champs, you know, you like to see build a sustained move. I mean, you haven't had, you know, more than 3 up days in a row in this in a long time. It's just up 3, down 2, kind of like the market. The market's been drifting lower. So first things first for Tesla, if you're looking for follow through on the upside, yesterday's high in Tesla, Friday's high, comes in just under 400. So at 498.20.
All right, so
Okay.
no escalation on the war front. We know that oil has been majorly in the driver's seat. It has been our proxy for the stock market. And Dennis, you were saying something a little bit earlier. We'll go back to the well here. You were saying that you feel like traders have not been looking at like the utilities energy play. They have not been looking at like the data center energy play because we've been having to focus on oil. If we're
It's
talking
went to
about
the back
energy,
seat for
we've been
temporarily.
yeah. So today here this morning, actually late on Friday, which we'll talk about in a sec here, we can go back to the well of the AI story. For better or for worse, Meta is going to be laying off a large portion of their 70 or 80,000 employees, about 16,000 employees. I think it was 20% of their workforce. This is a major
20?
this is a 20% of Meta's 80,000 employees. That's about 16,000 people or so here. And this was announced, interestingly, Dennis, you said it was like 10 p.m.
Friday
on
night.
Friday. Is that
Enjoy
true?
your weekend. You're going to lose your job. Classic Zuck. I mean, just unclassy all the way here with this, Friday night job announcement cuts. But you know why he does that on Friday night? Because I want to front and center like, oh, we're cutting jobs, and we're going to get rid of a whole pile of them here. So we'll drop it on a Friday night when the markets aren't paying attention. This is good news for Meta. It's good news for the Meta stock because it's efficiency. We just saw this with XYZ. The market wants efficiency. The market likes this idea. The market doesn't give a crap about the long term. It cares about the short term. And if you're losing 20% of your workforce, margins are probably going to go up. We know AI efficiency is going to be a driver of price. I've argued Meta, with Zuck, they already said, they talked about in the call a month ago, flattening the workforce. So this is it. So now they're coming out with the official announcement. At least I don't know if it's official. Is it official announcement?
Gary,
Reuters story. So Reuters
yeah,
story.
Gary
So I
saying
should
it's
take
not
it back
confirmed
because Zuck
yet.
didn't officially announce this. The Reuters story, but it's out there now. So whether it's been leaked because on a Friday night or what it is, so we don't have this officially yet. So I'll take it back on Zuck with the official announcement because it was just a Reuters story. But if they do indeed announce officially they're cutting 20% of the workforce, this is not great news for the overall economy. And I'm going to say, once the war passes, we get back to where we were. And what was working before? Well, certain names like software were not working. Hardware was very much working. We have to look at that. But you're going to still talk about this AI efficiency trade, where there's going to be companies that are going to make more money, at least in the short term. In the longer term, I worry, that you keep losing white-collar jobs. This is less money, but less people spending money. So there's a lot of implications here, which we have talked about in the past. That's why I sold my stock like Rivian, because, if you're sitting here and you're going to be one of these people that loses their job, you're probably not going to buy a Rivian. But it's more than that. If you're even sitting here worrying about losing your job, you're probably not going and buying a Rivian. So I had Rivian, I don't know if it was actually in my acronym, but it was a stock that I owned and I talked positively about. I think it did have it in the burr. I had like 5 hours.
It was a honorable mention.
I think it was an honorable mention. But I owned it. I owned it in the long-term account. I sold it in the earnings pop, and I was able to almost scratch it out, actually, which was nice because I'm like, things have just changed. Everything changed when we started seeing, how far agentic AI and obviously the AI disruptions are going to go. So if it's going to lead to job losses, people are going to be more conservative with their luxurious spending. Unfortunately, Rivian is a luxurious car, even though some people say, oh, it's not that luxurious. Their cars are more money. Did they come out with a cheaper version? Yeah. But even I would go as far as to say, if you're worried about losing your job, you're probably not looking to go buy brand new cars at all. So, I mean, I'm not even sure like a General Motors is insulated from this. And if you look at GM lately, it's been selling off as well. Now, GM very much, though, can benefit from AI efficiency. So I'm not sure I'm a huge fan of selling General Motors stock because they are so labor intensive. Like a little bit more AI efficiency there, losing some middle management could really help their margins out. General Motors margins are really tight. So, I mean, that's something to think about too. So there's a positive factors that better margins through AI efficiency are going to allow these companies to make more money. The end result is the problem is I just worry that job losses equal people not buying as many new cars. So the balancing effects, aren't going to be balanced because if they just, cut jobs, they're going to rally no matter what off the bat because the market doesn't look out far enough to think about that. So I think job loss is going to be more of a concern for like the second half of this year Right now, it's going to be this AI efficiency trade that Citrini was saying could bring us to all-time highs in the market. It very much could. It very much could. So I'm not saying come out here and sell all your stocks. The opposite, we see the metal lift here this morning up 3%. We saw the XYZ lift when they announced it.
Yeah.
All these companies started announcing layoffs. The stocks are going to go up. That's going to help obviously your indexes.
For your Rivian traders out there, you're coming into an interesting area, this 1460 to 15 even area. After the big rip that you had in February, it came back down to that area, rallied again, came back down hard again. So it looks like buyers are stepping up from 1380 to 14. Just so I like to, you know me, I like 3, 4, 5 lows in the same area. So keep an eye on that as potential support in Rivian. I wish I could give you support in GM here, but it's in no man's land here. It's had a huge rally, so we'll wait for that to settle down. Ford has just gotten absolutely crushed. We'll wait that maybe the 1150.
Sure.
But and I don't know, and this is something very, very short term here, but it could have long-term implications with the oil and everything. I mean, who's glad they got an EV? Who's glad they got an EV? This guy here. I don't have to worry about gas prices, right? I think that this, maybe this will signal a longer transition. I think they should have done, dual first instead of going right to electric, but a potential long-term catalyst. Who needs oil?
So,
I don't need oil. I don't need an oil change. I don't go to the gas station. I don't care.
But the problem is, Joel, is that these cars, so if we start to get into where people start worrying about their jobs, EVs, unfortunately, are a lot more money.
Expensive.
Your average person is not going to be able to go out and upgrade to an EV here right away. Does Tesla get the affordable model going and come? Yeah, maybe. Maybe Tesla's still the play here. But normally, when we see oil spiking like it has in the past, Tesla gets a lift from that because exactly what you're saying. We did not see Tesla get much of a lift from one of the craziest oil spikes that we've seen in a long time. If anything, Tesla dipped more. So overall worries about where this war was going, maybe the driver here.
Yes.
But, that's something to think about here. Is also another reason why Tesla, has been in consolidation station for a bit. People start thinking like that. Maybe they do start moving up to, the EVs, and Tesla obviously still number one EV maker.
Okay, so let's go back to the well again. I'm going to keep bringing this theme back up. It's kind of fun. Let's go back to the well again in Triple D. We'll talk about your kind of pillars here that you've been leaning on amid this AI disruption story. If there is going to be job losses, 2, you had 3, you had 4. We're going to kind of focus on 2 right now, which is energy and what else?
Hardware.
Hardware. I wanted you to say it. Okay.
I mean, so hardware is everything
yeah.
right now. I have been trying to rebuild my long-term portfolio to move away from its software components. I sold my IBM recently on the recent rep up to 259. And I actually got the top. I never get the top like that, but I did. I posted the STN. I always post them right when I make the trades. And I was like, I'm just getting, not even lightening up, getting rid of my IBM altogether because it's services and consulting. I was like, that's 2 areas that, back in December we weren't worried about, but we're very worried about now. So you get this bounce from 220 to 260. It feels like more of a selling opportunity than a buying opportunity. So I was originally in IBM around $230, rode up to 320, and I like the whole quantum aspect. I like the PE wasn't crazy, but everything changes. This is what investing is all about. It's like adjusting for change. So you have to adjust your long-term portfolio. I don't want to own anything that is consulting. I don't want to own anything that is services because I think AI is going to disrupt the hell out of those businesses. Unfortunately, IBM falls in that category, which is why I've sold IBM. And what do I do with the proceeds of IBM? I bought Marvell, MRVL. I bought Cisco. I've been talking about buying Nebius, and I wish I would have. We can get to that in a second, but I've been talking it up, and I never got back into it. But I've been looking, and there's a few other names I've been buying, but I've been buying looking at hardware names. So just getting into, more of and energy as well. We're talking about that. I bought Constellation Energy recently here too, because I think these 2 themes are still 2 themes that AI is not disrupting. People are saying, oh, it's going to disrupt hardware eventually too. Maybe. It might everything eventually. But right now, imminently, it looks like it's disrupting software. Meta cutting software jobs. So it's like that's where I'm trying to risk my portfolios more onto those names. So I think still sticking with the themes is going to be hardware and going to be energy. And then, like I said, in the second half, I think you're going to start looking at more necessity trades, which is why Walmart has held up probably very well. And also, I still think the bond trade is going to be a trade, but the war has completely, the war has completely hammered that trade because we're not talking about deflation right now. We're talking about oil prices going nuts, and interest rates aren't going down anytime soon, which is a stock like Rocket, which we'll get to later in the show, has just been crushed. And why I sold that as well, because interest rates with this war are not going down anytime soon.
Okay, so I think we would be remiss not to mention two of the hardware darlings, the hardware darling space, I will call it, which is memory. I want you to mention SanDisk and Micron here. You thought maybe these are a couple of the favorites in the hardware space. Is that right?
Triple D? Micron and SanDisk remain, like, these are your memory stocks. These two stocks remain, still in huge favor. And if we look at what they have done over the course of the last few weeks, they went down with the overall market, but they started rallying ahead of it here. And if you look coming back here. So what have we done? We've just been moving sideways after ridiculously fantastic reports from both of these, Micron and SanDisk. Like, are they overbought on an extended? Are they extended? For sure they are. But let's just think about what has happened with memory. The demand for memory is not going away. We had our friend Rahit in the STN room talking about, he's over in Silicon Valley there, and he's like, he's in the tech sector, and it's just demand for RAM's off the charts. Like, the demand is not going away here. Memory is in demand. It's always good to know that and to buy stocks when they're supply constrained and they can't meet demand. I mean, that's a great problem to have. So Micron, SanDisk. Micron is very close to all-time highs. SanDisk not far here now. And all basically coming back in the last 4 or 5 days because they kind of got hit with the overall market. So what we saw is like all stocks going down, worried about the war, just get rid of stocks. But the stocks that are coming back the fastest right now are the hardware names. So, and they just go hardware stocks. There's like 50 of them. You don't have to just go, with Micron, SanDisk. If you want to just stick with memory, there's STX. I was long STX over the weekend on the weekend trade. WDC, Western Digi, that's another one that's setting up here well. I mean, all these stocks look like they're going back to all-time highs to me.
Just real quick, the technicals for our traders here in the SanDisk and perk your ears up here, because I'm talking about a resistance area that we've taken out by a big margin here. And the reason I want to just point out this the 660 area. Very pesky, a triple top. We're well above it now. So don't know if we're going right back to all-time highs, but see if we come back to that 660 area of support. For Micron, similar situation here. I want everyone to have your head on a swivel. This 435, 436 area. I wonder if those were the exact same days too. Quad top right at that area. You're trading at 442.65. Above that. So let's see if they find support above those former resistance points. I think that that'll be important for the price action today in Micron and SanDisk. Western Digi. I got a little piece of Western Digi thanks to the Rev a long time ago. That's perping up too, and a little piece of SanDisk too. That wish I had a bigger piece.
We all wish we had bigger pieces of these names. Let's get to Nebius, which is another hardware name.
Oh.
We've been talking about this again. I've been talking about on pre-market prep, but in the STN room. I love this company. Valuation, is, always, a risk. But when you have growth, just in getting contracts, obviously start with Microsoft. Today, they get a deal with Meta. So they're just getting deals all over the place here. Nebius firing on all cylinders here right now. Stock not far from all-time highs. Consolidated here for the better part of the last 3.5 months. Ripping higher here. What's the news, Brentster?
All right, so Nebius out with a press release. Actually, what time was it at? We can tell on the chart. We can look there on the chart. I won't even say it because you can just look on the chart. Press release announcing a new long-term AI infrastructure supply deal with Meta. Under the 5-year deal, Nebius will provide $12 billion of dedicated capacity across multiple locations for Meta. The agreement has a contract value of up to $27 billion. That was in the press release from Nebius. Also, I feel like this is sliding under the radar a little bit. Nebius did reaffirm their guidance with this release here this morning.
It's a huge move, up 13%. I never like chasing moves, so I would wait for dips. But I mean, this company is just doing everything right here, right now. It's middle of AI. It's a name that everybody, all the big guns, are doing businesses and contracts with here and now. I mean, it's just firing on all cylinders. So it's a fantastic name. I always buy dips, not rips, so I would wait on it today. But I mean, if you get a dip on this name, I think this is a fantastic name.
Some bars are more important than other bars. No, and I'm not talking about the one y'all are going to tomorrow for St. Patrick's Day. Actually, I saw a lot of St. Patrick's Day celebrations going on this weekend. Feehan's promised us something for tomorrow, right, Feehan? Okay, I got a bar of interest here, and this was a warning bar. Some bars are more important than others. So this one had a real bad day, and I just want to give you the parameters from that day. You had a high of 134.93, a low of 19.17, and you closed at 20.47. And then it was pretty much kaplooey after that. A lot of people getting a lot of money back. I love to see it stay up here in this area. You're already starting to get a little bit of a leak off that pre-market high of 133. So not the only one that can identify that pattern there.
We're going to be getting Tim Quast from Market Structure Edge and Modern IR joining us here in a minute. But while we got a sec, Dennis, you teased something a few minutes ago, and we can just go back to it now while we do have a second.
Okay.
In the context of, trade ideas for the rest of the year, basically, you mentioned Rocket, and you also mentioned Walmart and like a Kroger. And when we're talking about these in the context of the AI disruption story, and much more importantly, the Fed rate cut cycle, Rocket, this morning when we were catching up before the show, you looked at Rocket and you're like, oh, Rocket got down to 14.08. That's down there, but still it feels early in a name like Rocket. Is that how you're feeling?
Yeah, so I had this one too as part of the burr where I had like 5 hours, and I sold my Rocket. Again, I came on the show and said why I changed my acronym. I changed a burr to Tilt, and Tilt hasn't been great. It's down 3%, but I tell you, the stocks I sold are down a hell of a lot more than 3%. So I've saved myself a lot of money. I sold my Rocket out, I think around like 19 and a half. And the reason I was like, I'm just, with this war going on, with AI disruptions happening here, and I don't know what that means for Rocket. There's too much risk here right now. And that's why I came out and said, look, I'm getting out of my Rocket RKT. I bought it around 17, rode 24. Would have been nice to sell at 24. Wouldn't it be nice to sell the top? But things have changed. Things came back. Rocket got beat up, went all the way back down. Then it bounced back up to this 20 area. And, I lightened up and got completely out of the position because I'm concerned about, one, potential AI disruption, but two, is that interest rates with the war aren't going down anytime soon. So, where I was thinking, we could maybe look to June and get rate cuts. Maybe we're going to start seeing lots of rate cuts in the second half. I think we will later this year. Nobody's thinking about that right now. With oil flying high, nobody's thinking about cutting rates. And then we don't even know the whole Powell-Walsh situation here right now. That's a wild card there too. So, there's so much uncertainty on the interest rate front here right now that I had to de-risk those trades. So, trading is all about, investing is all about making a thesis and then getting out when your thesis is being proven incorrect, at least in the short term. We can always re-enter. And I think this is going to be a great time to re-enter Rocket. Keith Briette upgrading the stock here today to outperform. So, maybe this is, going to be the time where, you look back and say, wow, it got down to $14. That was really cheap. But I mean, there's a lot of uncertainty here right now surrounding this business and surrounding the outlook for interest rates. Until we start seeing some life in the TLT, it's really hard to get on board with a stock like Rocket.
I'm looking at the CME FedWatch tool right now, and for the October 28th, 2026 Fed rate meeting, there are still a 42% chance that there will be no rate cut during the October meeting. The odds for no rate cut at all in 2026 are 30% right now.
The war changed everything. I really think it did. The war changed everything. And, so obviously TLT was breaking out and then completely rolled over. And people are like, well, why isn't it playing defensive? I mean, TLT is the outlook for where interest rates are going. And right now, traders think interest rates aren't going down anytime soon. And traders are probably right, which we can clearly look at the tool, obviously the FedWatch tool, to get that information as well. Tim's in the
Oh,
background.
Joel, you're on
Joel's
mute.
Joel, you haven't done it in so long. He's still on mute. He doesn't even listen. Joel,
He's listening.
mute.
He's trying. Look at this nice trend line he drew here on Rocket.
Yeah.
It's so pretty. And you
It's
were
so
saying
pretty.
something so good.
I'm just saying, this is not investment advice, but someday it will trade above this trend line. I
That's
mean,
an awful trend line.
You're probably right, Joel.
That trend line's called the "we fell off a cliff" trend line here.
Yes.
Holy.
Yep. And I guess if
Yeah.
I was good, like the rest of you technical people, I could do another kind of trend line coming down like this and give you a little bit of a channel, but I don't want to blow you guys away too much. But you know what?
What?
837. How can we keep Tim Quast waiting? The founder of Market Structure Edge coming to the stage right now. All right, Tim Quast, you know him. We're really fired up today. You better have brought did you bring your A game?
Well, I don't know if I have an A game, Joel. I'm usually coming off the bench, but yeah. I want cool Bono glasses like Brent's got. That's what I should have.
We all should have stuff that Brent has.
I'm not cool enough for that. But I think that what you were drawing on the screen there, Joel, was a great short trade. That's what that was.
That's what it was.
You were drawing? Yes.
Okay. Is this, what a week. What a week to have Tim on a Monday. Is this a turning point in the market? Options expiration, quad witch. Yeah, I'll still say quad witch because I want to. Index rebalancing. What does the data say?
No, we're bringing them back. We will is it in June? I think it's in June when we will again have single stock futures. And so it will truly be a quad witch the next time we do this. So you're correct. As usual, Joel, you're correct. Well, here's my answer. What I always talk about options expirations as potential turning points. From a trading and investing standpoint, you have to keep in mind that the market doesn't start over at zero every day and it's 6.5 hours of we have no idea what's going to happen. It doesn't work that way. The market has a cadence and calendar, and money comes and goes and it moves in measurable flows, and options expirations are turning points. The monthlies matter because that's where there is real asset movement. If you talk about 0 days to expiration options, they're a huge influence. And in fact, I think a lot of what has happened over the last several months is gamma scalping. And putting that in English, what it means is that sophisticated traders with very good data feeds, they're buying the better data feeds than you and I get, will hedge market neutral and trade volatility. And it's why the market has been in roughly the same range since the end of October. In fact, you could even go a little further back. But here's my answer, Joel, as to whether it will be a turning point. And bear with me, because I'm going to take a few minutes to show you some data. It will ultimately be, this will be the entire market. So I'm going to go right down the sectors, and I'll explain once what you're looking at. So we call it demand, market structure sentiment. It's an algorithm, and it's a 10-point scale. So if this number is below 5, it's negative. So in the communication services sector, it's 5.8 out of 10. That's positive. But then you come over to the other side and the sentiment trend is down. Short volume, the amount of volume, if you put all of the stocks in the sector together and you averaged it, they're half and half, 50% short, 50% long. Key behavior, indexes and ETFs, they're sellers. The average stock was down 2.6% in the last week and come down here. 4 out of the last 5 days were net selling. Not great, but still it's positive. Okay, let's look at consumer discretionary. Same principle. You want to look at where is sentiment? 3.4, terribly negative. Average stock in the sector down 4.5%. It's 55% short. Citadel et al. Are sellers. The sentiment trend is down. Look at all that selling. Is it near a bottom? Yeah, maybe. I mean, if things bottom into expirations, they have a propensity to rise out the other side. The question is whether we're there. Consumer staples, 3. Only 70 basis points down on average because they don't have as much volatility. But look at all the red: selling, sentiment trend down, passive money selling. Energy's been a great sector. It's 6 out of 10. It's well above 5, but the trend is down. It's less than half short. I mean, that's still pretty good. But if you look at the buy-sell balance, not great. How about financials? Financials, 3.5 out of 10, passive money selling, 54% short, average stock down 3%, sentiment trend down, 4 out of 5 days net selling. Avoid it till we get out of expirations. Healthcare, the only sector with an uptrend, but it's at 4.7. I don't like to buy anything below 5 because I don't know if it's going to stall. Average stock down 2%. Look at all the selling. Industrials, which had been crushing it right to February options expirations. Then the boat tipped over. 3.0. People are letting go their derivatives positions into resets. 54% short. Average stock down 3%. Sentiment trend down. Look at all that red. 5 out of 7 days net selling. Tech is the only thing holding the market up. And you'd look at the futures and you say, but Tim, all the futures point up. If you're trading on what the tape says today, you will be a loser. It is because the machines will always have better data than you. You cannot react to what you see today and expect to win consistently because there will always be a step ahead of you. But tech is positive, but the trend is down. I mean, tech could be the thing that pulls the market over. We are right on the precipice. Yesterday was the Ides of March. Are we going to get a knife in the back like Caesar? Will we come out the other side? I don't know. But again, people are letting go their derivatives bets in tech because it's so far down relative to what it was in February when they were set. Look at all that negativity. We're almost finished. Materials, worst sector, 2.9. I'd be watching materials probably. Because in April 15 of 2025, I bought the broad market at 2.1 and I levered long. So, but you want to make sure that sentiment is all the way down. Now, I've got one more little point to tell you about there.
On a roll.
On a real estate, 4.2, passive money selling, 55% short, average stock down 1.5%, sentiment trend negative, 4 out of 5 days selling. We come to utilities, the last sector, 4.5. Fast trading selling, 58% short, but look at this, only 20 basis points down on average. It's a hedge. I mean, if you want to hedge yourself in a market, you go long short utilities because they'll stay right in the middle and they'll protect you. So, if you want to be someplace, probably utilities, we look at healthcare, we look at materials, but we've got to come out the other side of options expiration. So let's look at the entire market. The entire market is 4.1. This is the worst. We have gone 225 days without dropping below 4, all the way back to April of last year. It's the longest stretch we've ever recorded. And when those end, it tends to be bad. And so I don't know. I think it is a potential turning point, Joel. But you look at the data and you say the average stock in the S&P 500 was down 3% last week. We were 53% short. Active stock pickers are sellers. And the trend is down. So let's go over to Edge. See, I would look at all this and say, I would wait to out the other side of options expiration. So Wednesday, when Jay Powell speaks, volatility options reset. Thursday, our index options expirations. We've had 3.1% volatility every day in the S&P 500 for a solid 22 days. I don't know how that's going to go. Friday is quad witching, as you mentioned, Joel. Next Monday, new options trade. Tuesday, everybody squares the books. I would be very careful until next Wednesday. I will show you some things that you might want to be in, and we're looking at them. This is what I call the buy fives portfolio, and I'll show you what the criteria are. So if you wanted to pick up things that just sit at 5, on that 10-point scale, they're right in the middle. They have 1 million shares of volume at least. They are not small caps, because 97% of all money isn't in small caps. It's 3% of the market. Don't bother with them. You could trade them if you really know what you're doing, and maybe Dennis, you can do that. But I'm going to go where the money is, where 97% of the money is. Less than 50% short with a 5-day downtrend in short volume, and that will give you these stocks. If you wanted to, pack yourself at the top of the market cap range, here they are. So, they're all topped or bottomed. Meta, Tesla, Walmart, Visa, J&J, it's 50% short, Costco, MasterCard, T-Mobile, Integrated Surgical. People forget about that. That's a very good, it's one of the 100 largest stocks. Uber, Lockheed Martin. I mean, you take those and you sit in them, they have very little volatility. They are not short. They're the place to be if we have a storm. And so, it's an idea for you.
Okay, Tim. So the financials here, not the biggest part of the market, but a very, very important part of the market. Software disrupting financials, right?
Yep.
Did the data warn us?
Absolutely. Absolutely. All the way back in November, we were telling our corporate clients we have a bunch of software customers in the corporate business, including folks like Intuit, Zscaler. It's been very challenging for them. But we could tell them in November last year, we said passive money patterns have been cut in half. The probability that you decline is very large. So what should you do? Don't be an outlier when you report results. If passive money is leaving, don't go beat your chest as a public company talking about your results because you're going to get clocked. All the hedge funds are going to short you because they're going to know what we know. Passive money is not buying the group. Financials did the same thing at February expirations. They looked very good right till then. And then what happened? Demand declined and supply rose. Short that. You can short financials and do it until they reverse. Are they about to reverse? Possibly at options expirations here. But still, I don't like to own stuff that is under 5. And that's what this is showing us. A 30-day view with rising supply, falling demand. Just be careful around that. And so, yes, it absolutely will tell you what's coming. By the way,
Tim,
you can get our free market desk notes. Obviously, we want you to try it, but just read what we have to say. It's pretty good stuff.
Tim, is it the best place to be right now, just on the sidelines, you think then? Like just playing it easy? Is there other place you're hiding here? Tell me about, if we're still saying we're not out of the woods here yet, do we stay in cash or do we hide somewhere else? Question mark to you.
Yeah, I mean, it's, I'll tell you what I have done, and it's, it's not advice. We're data analysts, but since February options expirations, I have been short and long volatility, and it's produced a 24% return since then. But it's rugged, right? If you're gonna use, let's say, UVXY, UVIX, every day that volatility declines 5-7%, to me, in these conditions, it's a good thing to short. Look, I could be wrong. I may have to cover my trades. But right now, if the market is way up and I can look at the data and the data are the exact opposite of the market, which thing is likely to be right? Well, it's more likely that all the data that I'm seeing is correct and not what the futures are telling you. Keep in mind that what you see in the futures market is somebody trying to fool you. That's what it is. All right, so you don't think that we're going to have, I don't know, we could have a big rally today. It often happens right ahead of options expirations because those bets are very cheap. If something is all the way time decayed, you can chase a price up, the options move, and then you get stuck holding the bag because you buy it and all the machines dump it on you. So be very careful here. But I think if you either sit out, if you are risk averse, sit out till next Wednesday. We will know what condition we're in. I think there's a high probability that this could break. I'm not saying it will. I don't know. All I know is we have not been at 4.1 since April. It didn't even happen in October and November when we had pretty big moves. So I look at this collapsing demand all the way down to that green line. When it drops below the green line, it's a short-term entry. But if it drops sharply, if it's 3, we have a regime change. We could have a bear market. Look at the supply side. It's stunning. And if you back up a year, here's what I mean. And again, I reiterate, if you're risk averse, sit out. You can wait to see what happens. The last time this happened to us was here. Now, I'm not saying we're going to have the same thing happen, but the conditions are the worst since then. And I play probabilities. That's, it's everything is a probability. There is a probability that the market could drop sharply. I'm not saying it will, but I have made a bet that it could, that I may have to fold, right? Sometimes, just as you did with Rocket, Dennis, I may have to throw in my fold my hand and take my lumps. But if I'm right, it is because it's a rare opportunity. It's been 225 days since I've had this opportunity, so I'm going to play it and see what happens.
All right, we're nerds here, so let's have a mathematical aha moment. The reason why the S&P doubled the performance of the average SPX stocks the past year.
I am glad you asked, Joel, because this was a moment for me. In fact, let me before I come to this, let me give you this. So here is, can I display this? Yeah, it's okay. Here's what I want to show you. This is 1 year of SPY. So it's trading around whatever 660, right? So SPY is the orange line. The red line is the average stock in the S&P 500. So they look like they're tracking each other over the last year. But if you go run the percentage change, what you find is SPY is up 13.5%, and the average stock is really lower than it was in July. It's up 3%. Well, how can that be?
That's
right?
Crazy
How
stuff.
can it's crazy. It's not weighted. This isn't RSP, an equal weight. This is saying if you just add up all the prices of the stocks comprising the S&P 500 and divide by 500, you will get an average price, about 220 right now. And it hasn't moved. Well, why is that? And what then does it represent? If you're buying if you've bought the S&P 500 and you're thinking, why is it I'm underperforming the market? There's your answer. It's a terrible thing if you're a stock picker, because if you're buying the basket, it is not performing like SPY. You're better off owning SPY. And the answer, Joel, this was my aha moment. So I do data science all the time. I spend a third of my time on it. And so this is what I discovered. This, once again, is SPY. This is the volatility of SPY light green and the basket dark green. If you add them up over the last year, the volatility of SPY is 290%. That's why we trade demand supply divergences, because you're capturing not some of the 3 or 13%, 290% of movement. Could I capture some of that? Well, that sounds like a lot. But if you add up the basket, it has volatility of 640%. Subtract one from the other, and you have nearly identical explanations for the difference. You back out the volatility of the basket, and it explains why SPY vastly outperforms the basket. And it goes to Eugene Fama's Nobel Prize on the efficient markets theory that says, over time, volatility erodes the advantage of equities over fixed income. And there you have it. I mean, if you're trading the basket and you sell at the wrong time, you will lose money. And so it's volatility that is the issue. And it's a harm for public companies. Public companies do not realize that ETFs harm them. I'm not against ETFs. In fact, if you're a smart investor, forget stocks and own SPY. You have a better chance to outperform the market.
But
I think that's healthy. Right? It's unbelievable. It's unbelievable. I agree. It's crazy and it should not be true, but it is. And the math prove it.
Well, I spend a third of my time watching college basketball. I guess maybe I should spend it on data. Folks, real quick, I just want to make an announcement that we're going to be doing more stuff here with Mr. Quast. We had a trial run last Thursday.
It was my fault.
But he's going to be doing some more content for us on STM, but we're going to put it into our YouTube channel. It's going to be this Thursday at 2:30. He's going to come on with his buddy Brian, so you don't have us interrupting. And more content coming from
we'll run a test.
STM.
Josh and I will run a test in advance to make sure it's working.
Tests are the best.
It's
Okay,
important to test.
Tim, thank you so much. Extended
Good to see you guys.
With Tim Quast, founder, CEO, Market Structure Edge.
Thanks, guys.
Thanks, Tim.
Earnings
preview. So everybody's going to be talking about the Nvidia GTC. That's on the bottom screen here, on the bottom of your screen here. But, we've already covered that just earlier here. We've got to talk about the stocks that are going to report. We did have one earnings stock here this morning. Dollar Tree reported earnings, DLTR. Give us those, Brentster. We might as well jump in and do the one stock that reported here, and then we're going to do the preview here again.
All right, Dollar
But-
Tree reporting a mixed quarter. They beat slightly on the bottom line for Q4, 256 in earnings. Analysts were around 252. The sales did miss at 5.45 billion. Analysts were up at 5.46 billion. You get the chart up there. There you go. Guidance looked pretty much in line. They're expecting Q1 earnings $1.45 to $1.60. Analysts are at $1.55 for 2026. Dollar Tree is expecting earnings $6.50 to $6.90. Analysts are around $6.70. Stock this morning trading up kind of modestly about 2%.
Well, and interesting enough, we dipped hard on the initial report, but the best morning to report ever. So, like, just the fading, the contrarian moves to where the market is has been the play. Like last week, we had, a day that we were down significantly here, and all the stocks were selling off, on the earnings. Today, we have, a day where the market is ripping and it's an everything rally going on. You get a stock that's dipping on earnings, and money managers like, I need stocks. They just come in here and they buy that dip. Dollar Tree got down to 101, comes right back.
Got to 100 right on the nose. But
$100 in the kisser.
Dennis loves one number. Okay. So I'm going to give you one number. 2.735. Why 7.35? Because the last 2 days highs were 112.73 and 112.74. That's the number. Get above that, we're all good. Get a rally. Keep an eye on 112.735.
Go back to that earnings preview, Brentster. Show it up there again because we're having a number of companies. Now, again, this isn't a huge week for earnings, but there's some big names. And if you look to Wednesday, the biggest name of them all is going to be Wednesday afternoon with Micron. I mean, and again, I don't think it's a coincidence here. Micron showing some strength, pre-earnings run trade, which we trade over, obviously, the Stock Trader Network with the room. Trading up here substantially here, again, up 4.1% here this morning. So if you took Micron long over the weekend simply because it was going to report this week, you're rewarded already here. I mean, it's setting up for it looks like a run, and maybe we even get to all-time highs today, well before the company reports on Wednesday. The bar will be high, but I mean, these companies are still in supply constrained. The demand is off the charts, so they're killing it here. Give us a quick technical here on Micron, Joel.
Micron, I'll just give you the pre-market high, and that is 446.67. You want to see follow through on that? I gave the numbers earlier. This area of 4 highs, this is more important to hold the 437 area. So that's it for Micron. Do we have time to our rating? Do we want to sneak a rating in, Triple D, or do we not care about ratings today?
You can do it if you want. We already did Rocket, but if you got one more.
Give us a juicy one. Give us
not that much ratings land. Again, and when the macro is driving the bus, you don't have a lot of crazy calls. Seaport Global downgrading Qualcomm to sell. That's a juicy one. So a little late to the party here. I'll give them an F- because the stocks went from 180 in the last 2 months. Now you're downgrading it. Sorry. They give a price target of $100. The memory crunch is likely going to hurt Qualcomm's customers the hardest. Qualcomm looks set to lose share even while its addressable market shrinks this year. We downgrade to sell. This should be a difficult year for Qualcomm. To begin with, we expect mobile phone volumes to drop 10 to 15% on the back of increased memory prices. While Qualcomm's customers are losing share in their end markets, we think the risk to Qualcomm losing addressable market to internal silicon is growing more acute with no obvious remedy in sight. Memory price expected to crimp handset demand this year. So the memory prices, I'll take the F- back. It's a pretty damn good argument there. I just feel like, why didn't you say this to me 2 months ago or a month ago even? And I own Qualcomm in my long-term portfolio. It'd be nice to read that a month and a half ago, and you're like, oh, a bad one's going to be Qualcomm, and maybe you lighten that up. But a little bit late to the party.
Okay, L. I have to give this an L for late. And it's trading up on supposed bad news. So let's see if we can put a couple more lows in this area. Okay, folks, we're going to wrap it up today. Tomorrow, we're going to have a special St. Patrick's Day version. But we're going to have an Italian on as a guest. That's Joe Saluzzi is going to come on. We
Nice.
haven't talked to Joe in quite some time. So that's what we got lined up for tomorrow, folks. Thanks. We're off to a good start. Let's keep this market up here for the remainder of the day.